but I'm hard pressed to find a scenario where Bitcoin doesn't at least go to 12 to 13,000 before putting in a bottom. And I have a worst case scenario that's well below 10,000 on Bitcoin. So
hello everyone and welcome to the Daily Crypto. We are back with yet another Gareth Soloway video for you guys, but before we get started, let's see what the Fear and Greed Index has to show. As of recording this video, the F&G index is at 28, much better than yesterday. This is because Bitcoin is having a small bounce as the dollar is going down. Currently, Bitcoin and Ethereum are trading for 21,200 and 1,715. With that being said, let's continue with the video.
I think overall it's a negative, right? Anytime you have this potential geopolitical scenario, especially after Russia invaded Ukraine, it just opens a possibility that it could happen with Taiwan. It definitely puts people on the back burner. Now, the key is this market has been going up and down inversely to the US dollar. And we know that the more geo instability, the more upside on the dollar, right? More people hide in the US dollar for safety. And so that, again, just right there is a negative for equity markets, for crypto markets, for gold. Nicely enough, we have potentially seen a major reversal in the dollar today. So we might be seeing a short-term top there, which would be positive for risk assets.
We know that stock market moves inversely to the dollar, and the track US government is going on makes it seem like we might see a stable political condition in the coming future. This is why Gareth thinks dollar will get stronger and equity markets will fall. However, it looks like DXY has topped out for now as it is reversing after creating a new swing high.
Let's take a look at this. Take a look at this channel. So this, again, beautiful trend line from this high going back to 2022, early 2022 here, and look at the yen, what it just did today and how it's reversing. So these are the things that as a technician, I kind of watch for. And this, by the way, this doesn't mean that the yen is all of a sudden going to be strong and just continue to rally against the dollar. But what it tells me is in the short term, the dollar may be topping out and due for a pullback. So again, if you're looking over the next couple of weeks, I would expect further dollar weakness. And then this chart should come in and pull back, maybe down to this lower level. We'll have to watch and see. But those are just some cool stuff I love looking at.
The reason why Gareth is convinced this is the local top for the dollar is because USD has touched the upper trend line of the channel against the Chinese yen. This is an area of high resistance, and we're already seeing the dollar getting rejected from here.
The bond market, and again, bond market is the biggest market out there, known as the smartest money. And interestingly enough, we've been seeing, and this is something I noted after Jackson Hole, the stock market freaked out, right? Everyone's like, oh my goodness, Jerome Powell's so ridiculously hawkish. And then what do? I go to the facts, I go to the charts, right? So what I did was I said, okay, well, if he's super hawkish, the most he's ever been, shouldn't the 10-year yield be making new highs? And the answer is I went to the chart and I'm like, wait a minute, he made these comments over here and we've gone up a little bit since then, but you're not even back to the June highs of 3.5% on the 10-year. So to me, that tells me that smart money is saying, hey, Jerome Powell, the economy is going to weaken enough over the next few months where you're not going to hike as much as everyone's anticipating. And therefore, the 10-year, at least as of now, is telling us that it has not made a new high. It is calling the bluff of Jerome Powell.
Historically, the 10-year bond markets have been at their highest whenever the Fed became extremely hawkish. But this isn't the case this time as we haven't even retested the previous highs.
Gold has actually been an amazing performer this year. Now, if you're trading it in US dollars, it's down a little bit on the year, but then compare it to like an S&P that's down 20% or close to 20, or the NASDAQ that's down more than that, and you really see the standout of it. But if you looked at the gold chart in terms of euros or yen, it is a pretty much one of the only things that is net positive for the year. And again, the reason in dollars is the dollar has rallied, 15, 17, 18% this year alone. And then gold actually is only down, I think, about 4% on the year, something like that. So again, think about that. Think about how the dollar being up 15%. In my world, I would say, oh, if someone told me that, I'd be like, oh, well, gold should be down at least 15%. It's up 15, then the dollar's up 15, gold should be down. And the fact that it's only down what it is very, very bullish. And if you get a weakness in the dollar, if we are seeing a Fed pivot here, where let's say in September they go to 50 basis points instead of 75, watch out, because that dollar will start to fall and the gold chart should take off. And let's not forget that the chart itself of gold is still very, very bullish. It is holding its channel. It's holding it's had its big move up from 2018 to 2020. Here it's consolidating, it's holding this low. And again, to me, it's saying that at some point, this is going to start to make that next move up and likely break out to the upside. So I think for the most part, metals are the safest place to be. They've been performing well.
Gareth says gold is one of the best performing asset classes this year because it has not dropped hard like the S&P 500 has. He says if dollar gained 15%, he expected gold to drop by a similar margin. But that isn't the case as gold has been holding up extremely well, and this could be the time gold starts to make a reversal. If we look at the chart, it is sitting at strong support from where we witnessed massive rallies.
I fully expect inflation to come down. I just don't think it's going back to 2% in the next many, many years. But do I expect 4% in a year, somewhere in that vicinity? Absolutely. I mean, there's no way oil can go from $120, $130 a barrel down to 82 where it's trading now, and you don't see some coming in of inflation pressure. So I think that's the key. We've seen a lot of metals like copper's collapse from its highs, nickel's collapse from its highs. That's all come back in, which will help alleviate the inflation pressures. The one kicker of why I think inflation will remain above 2% is because you have the inflation on wages, right? And so basically companies have had to pay workers quite a bit more, whether they were paying $15 an hour, then they had to go to $25 an hour, whatever it may be. But what they can't do, McDonald's can't double the price of a burger overnight, right? So what they do is they'll raise it by 10%, like the dollar store raised their prices from $1 to $1.25, right? Now they're paying their employees double probably, but at the same time, they couldn't do that. They can't raise it from $1 to $2. So what they'll do is over the coming years, they'll slowly inch those prices up to compensate, and that'll keep inflation above 2% over the next few years.
Now that the Fed has introduced some measures to curb inflation, Gareth thinks that it will be coming down to 3 to 4%, but anything below it is not possible for many years to come. All the trillions that have been injected into the economy will have to be taken care of very slowly yet carefully.
So one of the first things to note here is that Bitcoin for the last 10 days prior to yesterday was basically trading sideways, and that was while the dollar was going up, which is very unusual. But the dollar spiking yesterday in the overnight last night, it was finally kind of the straw that broke the camel's back. And finally, it broke that 19.5 level, which is the 2017 high. So if I zoom out here, you can see that's this previous cycle high back in 2017. So once that happened, there were a bunch of stops that got run, and it kind of pushed Bitcoin even lower. Today, we're seeing the dollar pull back, so it's bouncing, but it's a tough scenario for Bitcoin here, and I do think it's going to ultimately go lower. Doesn't mean if the dollar pulls back a little bit more, it won't have a small bounce, but I'm hard-pressed to find a scenario where Bitcoin doesn't at least go to 12 to 13,000 before putting in a bottom, and I have a worst-case scenario that's well below 10,000 on Bitcoin. So I think it's important for Bitcoin investors to realize that this is the first bear cycle that the Fed is not printing money during, right? And so you have to take that into account when you're doing your cycle. So if previous cycles saw an 80 to 85% correction, you got to think this one would at least do 80 to 85%, which would be 12, 13,000, and it might even do more.
With Bitcoin breaking the 19,000 support level, Gareth says the next key level is 17,500, which if broken, will let Bitcoin tumble down to 12 to 13,000. But before we get there will be small bounces from important support zones.
Bear markets notoriously are going to test your emotions because fear is such a pervasive, emotion to have. And so investors, you have to be ready for that. Now, the number one rule in a bear market is don't overinvest, meaning that the bigger the position you have in a bear market, the more emotional tug when it goes against you, right? So again, if you're investing more than you feel comfortable with, you need to be very careful about that because the market will push you to your extremes to the point where you almost throw in the towel or do throw in the towel. So my policy is, start small. You can always add if it goes a little bit lower. If it just goes straight up, then it was a great trade and you say thank you very much, but always err on the side of caution. And then you have to start controlling that emotion. Start paying attention to the psychology of the markets. Like, if you watch Twitter and you see something where everyone is so bullish on it, you need to create a situation in your mind where you start to say, wait a minute, let me step back. Too many people are bullish. Maybe I shouldn't jump in here. And again, look at Bitcoin. Look at the hype on Bitcoin. Look at the hype on oil when it went to 130 when Russia invaded and everyone was calling for $200 a barrel. The same things repeat over and over again in charts and in markets. And if you can just learn to not be influenced emotionally by them, you get put in such a great opportunity position.
Gareth gives some much-needed advice to new investors who are going through their first bear cycle. People tend to invest too much in one go and then panic sell when things start to go a bit wrong. This is why 90% of investors end up losing their money. Gareth advises that we should start off with a small amount that we're comfortable with and then gradually add from there if the prices go lower. Thank you for watching. Please like this video and subscribe to our channel to stay updated with the latest market trends and events. See you guys in the next video.